In a year when the IMF has downgraded the UK's 2011 growth forecast to 1.1% and the Eurozone is in crisis, contrast that story with the return potential of Africa, which has enjoyed 10 consecutive years of GDP growth that exceeds the world average. The IMF is forecasting that 7 out of 10 of the fastest growing countries in the world over the next 10 years will be in Africa. We cross now to London to look at trends in the private equity space in Africa with Sarah Alexander, who's founding president at EMPEA. Thanks so much, Sarah, for joining us this afternoon. Well, taking a look at that growth scenario, it's providing nice incentive for investors coming onto the continent specifically. Let's delve into particularly private equity investment. What kind of appetite are we seeing at this stage of the game for private equity on the continent?
Thank you, Lorado, for inviting me on the show. The appetite right now for private equity investment in Africa is quite high. I'm here in London as we are putting on a major conference to demonstrate to the investor community the opportunities in Africa. And I've just come from an overpacked crowd at a hotel here in London. Investors are really clamoring for information. I think they agree with us that the time is now for investment in Africa.
So with that being the kind of appetite that's out there, let's go through the half-year period so far and what we've actually been able to see in terms of funds raised in Africa.
Sure. I mean, fundraising for Africa remains challenging, but the great news is that this year the largest ever fund closed in Africa at almost an Africa-dedicated fund, almost at $1 billion. And this was a big leap, not only in terms of the size of the fund, but actually in terms of the composition of investors going into the fund, who are almost all purely commercial investors from across the globe, really indicating that the more sophisticated investors get it.
Well, it's certainly not coming through without some incentive or some of that message being driven by African states themselves. I mean, unlike China and Brazil, where the trend is towards the localization of capital sources, I've been reading that commercialization is the theme for African funds. So take us through that shift that we're seeing in Africa right now and how that's contributing to actively drawing interest.
Sure. The Africa continent is so underpenetrated relative to other markets, other emerging economies in the world from a private equity perspective. Over the last 5 years, roughly $5 billion has been raised dedicated for private equity long-term growth capital investments in Africa. Just to give you a comparison, we're talking about $30 billion raised for Latin America over the same period. So there's an underpenetration, while at the same time the opportunities on the ground have continued to expand. You mentioned the growth of the economies early on in your comments. In addition, the regulatory environment and the legal environment in these countries and the diminishing of conflict in a number of these countries has really laid the groundwork for investors to feel quite comfortable coming in. Mm-hmm. So I do expect, while we may not see huge leaps immediately, I do expect to see many more commercial investors coming in and investing in these funds for Africa.
In the face of what kind of risk challenge scenario then?
Well, I think, look, there's a lot of opportunities, and there's a lot of opportunity for diversification, so diversification of risk as well. As you meant, 7 out of the top fastest growing countries are in Africa. So most investors would look at a Pan-Africa fund and make sure that their investments are across various countries, from South Africa to Nigeria to Uganda and elsewhere, including in North Africa, and then also to diversify by industry. So the opportunities are clearly there in meeting the demands of the growing middle class, which needs more access to services and goods, from the business and services side to real estate as well as infrastructure. And so while there are always risks around a specific project, the real beauty of private equity is it provides you with a diversified pool of investments, and that in and of itself helps you minimize risk.
Of course, investments, as you say, can be structured to mitigate against risks. Identifying risks, though, is one thing. You've also got to anticipate just as much. And this specifically with regards to changes in judicial and regulatory frameworks again, as well, Sarah. Is this becoming easier to do with the African continent becoming more understood, possibly?
Absolutely. I think that the more that the African continent is understood, and also the more that the African regulators themselves understand the value of private equity, which really is, in this context, very much needed capital to help companies grow, which is in the interest of all the countries in Africa. As the regulators in Africa understand it better and open up their markets to welcome it, both domestically and for international investors, then the two sides, the education from both sides means you're at a perfect time right now where, as I was sort of saying earlier, there's an opportunity there. Institutional investors are interested, and the regulators, for the most part, are embracing it, allowing their domestic institutions to invest in private equity funds, which, for an international investor, having a local pension fund or equivalent invest alongside you is a huge risk mitigator, because they are actually bought in to the investment too.
Sarah, with that being the overall scenario, while that is the case, for any private equity investors, you've got exit options that are important, and it's an important consideration when investing in African companies. We've got only 4 stock exchanges in Africa, for example, that have a market cap greater than $500 billion. Others do not have liquidity to absorb IPOs in excess of about $100 million. To what extent does that make investors wary or hamper investment decisions?
Sure. No private equity investor goes into an investment in a company in Africa or anywhere else without already having sort of figured out what the exit options are. And the exit options, for African companies IPOing and going public are going to be fewer than in a highly developed, economy in Europe or the United States, where you have very liquid trading and you have coverage on the stock exchange. So, these investors are going in thinking that IPO is a great option, and when windows open, and if they have the right opportunity, they will go ahead and do it, either on an Africa stock exchange or actually outside of Africa as well. But then alternatively, many of the exits are coming from strategic sales. So what the private equity investor can do is really make these companies ready for a global multinational corporation or an Indian firm or someone else on the continent, another firm on the continent, to go ahead and acquire that stake. And so we think of private equity as really getting the company ready to make it first class from a governance perspective, commercial perspective, accounting, et cetera, transparency. And then it becomes an extremely attractive entry vehicle for other, or a takeover option for other players in the market.